welcome that has joined us today on this second edition of National Economic Outlook webinar series brought to you by CFA Society Nigeria and FITC. At this point, I would like to the MDC of Financial Institution Training Center to give opening remarks into the speakers.
Hello, good morning, everyone.
Good morning.
Yes.
We can hear you loud and clear.
Thank you very much. It's been such a pleasure to have all of us. It's also a greater pleasure to see that we are bringing together some of the industry best to today's program. We're very delighted about the great things that we have done over the years, partnering with CFA to bring knowledge solutions. We're more delighted about the fantastic work that we do at FITC, bringing learning. And so in partnering with CFA for this very, very important activity, which we believe is very significant at the beginning of the year, to share insights with regards to national economic outlook. It is something that equips individuals all over in different organizations, whether they are a private sector and of course public sector as well. And to that regard, we are very certain that there will be many learnings, loads and loads of learnings from this session. Very significant insight from thought leaders who would be sharing thoughts from our keynote speaker all the way to the panelists. We are looking forward to having a very exciting moment this morning, a moment where we can share thoughts and ideas that can help catalyze businesses and organizations through the year, but more importantly, also support and equip businesses and individuals to explore and maximize the opportunities and not look only at threats and weaknesses that would come from sort of some of the insights. And in closing, I would like to say to CFA Society Nigeria, we are very excited and proud to do this with you. We recognize how much you do to promote the highest standard of investment practice in Nigeria, and we're delighted about the community that you have built, community of vibrant professionals that would interact and develop investment professionals to the highest level. And so thank you also to everybody who's put this together, the team at FITC, the team at CFA. We look forward to building greater connections and broadening insights, knowledge in ways that are impactful. Thank you, and thank you for being here with us today.
Thank you very much, madam. I would like to invite the moderator of the session, Mr. Wale Okunrinboye, EIO, extension and the chair of Investor Relations of CFA Society Nigeria. Wale?
Okay, good morning, everyone. Pleased to welcome you all to another episode of National Economic Outlook series. I think what we'll just try and do here today is not to play God, but to try and speak to experts on what we think or how we think the Nigerian economy would sort of play out through 2024. I mean, everything has been, the last 1 year, I think, has been quite volatile, and I think being able to sort of get a grip or some sort of pulse as to how you think things would shape out is something that a lot of people sort of value in this day. And I think it's very useful for CFA Society to put together a forum as this where we invite people to come and share their thoughts on what they think or how they think things would pan out over the year. In terms of agenda, I just want to be sure our guest speaker is in. Can we confirm she's in? So maybe I can read her profile.
Yes, I understand she's in.
Okay. So we have a very erudite scholar that's going to give us a keynote address. Chinwe Egwim, she's the chief economist at the Coronation Merchant Bank Group. Permit me to just pull up her profile, and I will have that up. Yeah, so Chinwe currently holds the position of chief economist and head of economic research and intelligence at the Coronation Merchant Bank Group. She's recognized as one of the leading economists in Nigeria with an impressive over 1,000 published notes and articles and reports. She's known for very precise forecasts, and she's a trusted voice in macroeconomics in the Nigerian industry. Recently, she was appointed to the Presidential Fiscal Policy and Tax Reforms, and she's also a very sought-after public speaker with media appearances on reputable media platforms, BBC, CNN, CNBC, Arise. And she's an accomplished author. She's published bestsellers, Understanding Economic Jargon. And prior to her current role, she worked at First FBN Quest Merchant Bank, Fitch Ratings, as well as the Central Bank of Nigeria. Chinwe, I think we can have you up for your keynote address. After she does a keynote, I think we'll talk through the panelists and we'll get the show on the way. Okay.
Thanks, Wale. Can you hear me?
Yes,
Yes, we can hear you, Chinwe.
Yes, we can hear you. Yeah.
Okay. I just want to flag that I'm very ill. I'm coming from the hospital now just because I wanted to fulfill this promise. And then I'll be returning to the hospital. So I won't be able to stay as long as I would have liked to. I think my slides are with you. Can you hear me?
Yes, we can.
Yes, we can.
Okay, I thought it would be best to run through the slides while I talk. Or would you prefer I just speak and the slides are distributed later? Thank you. Okay, thank you so much. So before I dive into the presentation, I think I'll just start by expressing that the general outlook for the macroeconomic environment this year is still that of a hazy macroeconomic environment. This year has been somewhat difficult in running projections. We've had to shift from the usual base case scenario to having to pull out up to 3 scenarios to project because of how dynamic things have been with regards to specific indicators. So when I say hazy macroeconomic environment, what do I mean? Sluggish growth, elevated inflation levels, relatively high debt burden from a fiscal perspective, and then a visibly weak naira against the USD, which I'm sure everyone is seeing. Of course, this new administration, they're not new anymore, the current administration has lofty plans to steer the economy towards stability. And while we are cautiously optimistic with regards to sprouts of growth potential, we do recognize that transiting from policy plan to effective implementation is not quick. And it is quick fixes that are required to shift the economy towards the desired stability that can trigger GDP growth levels to at least 5% year on year. So this month, which is February, we are expecting to receive the GDP figures for full year 2023. Our current projection for that is 2.6%. So what I will do is begin with views around core macroeconomic indicators. I'll segue into policies from my vantage point, highlight my sectoral watch list, touch on commodities, and then conclude with just a few front burner topics that have come up in the past month. So the slide that you have up right now is that of GDP. In the first half of this year, we do expect to see mild growth historically, Q1 does post the sluggish growth amongst the other quarters, and normally we would see a post-festive slump. So that's when we compare it to the quarter before, which is the quarter that has the festive months, your Christmas season. There's usually a slight pickup in Q2, but this is really going to be dependent on positive policy impact targeted at one, FX liquidity constraints, supply chain activities, and consumer demand patterns, among others. Now, the impending growth is primarily rooted in non-oil sector. So we do expect to see growth in sectors which have posted relatively strong growth over the past quarter, such as finance and insurance, telecoms, construction, and trade to an extent. Agriculture continues to play a critical role. It accounts for over 20% of total GDP. For us to feel celebratory over an agriculture growth, we would be seeing an average of about 5% year on year. It's obtainable, but of course, for that to happen, well-targeted policies need to be implemented. Another factor that impacts GDP figures is the transmission effect of foreign exchange depreciation on businesses. And the sector that would really reflect that would be manufacturing. So fluctuations in currency value have a cascading impact on various sectors, influencing cost, pricing strategies, and overall competitiveness. There's supposed to be some kind of impact from the expansionary budget on GDP growth as well. Of course, there are global factors that would have some kind of trickle-down effect on Nigeria's domestic growth. For global growth, according to IMF, GDP is projected at 3.1% year on year this year. The World Bank has a slightly different view. Their current projection is about 2.4%. So they're not as optimistic as the IMF. Well, emerging economies on average are projected to see stable growth in 2024. But with sizable shifts across regions as tight financial conditions continue to weigh on household and business consumption. There's also factors such as geopolitical tensions, factors such as commodity prices, that's like oil as well, swings in prices of oil as well. Inflation and monetary policy from a global perspective. Indeed, there has been we've seen recorded dips in inflation across advanced economies. However, headline inflation across countries remain above their respective central bank targets. The consensus views that inflation will continue to moderate this year. We have seen central banks slow their pace of interest rates increases, but we do expect, we're looking forward to seeing meetings out of FOMC, the ECB, and the Bank of England as well. Next slide. Is that, yeah, inflation. So for inflation, what we have right now, and please let me just highlight that these are first round estimates. We're having to revise our projections. But for headline inflation, and this is our base case, we have it at 23.5% year on year. You would see a declining trend in the chart that's in there. There's an expectation that it will peak sometime in March. And that declining trend is really on the back of positive base effect, not due to any big policy shifts. However, we would be excited to see big policy shifts that would help with the cost push side of inflation. So we expected declines should be recorded. Structural issues that are impacting the cost of doing business, such as insecurity and poor infrastructure, still persist. And so these things need to be tackled. Of course, there's exchange rate depreciation as well, which impacts imported inputs, and that has an effect on inflation as well. We do have a component called imported inflation in the broader inflation basket. Residual effect of PMS subsidy removal on consumer pockets and OPEX for businesses as well would impact inflation. We can go to the next slide, which is exchange rate. No, exchange rate. Exchange rate is a front burner topic. FX liquidity constraints continue to persist, and expectations are that they will persist in the continue to persist in the first quarter of this year. We're already in February. Now, over the past 6 months, the CBN has taken steps to enhance liquidity and FX supply. All FX transaction windows have been consolidated into the NAFEM platform. We do understand that outstanding FX obligations, particularly those of foreign airlines, have been progressively settled. This is based on information that was disclosed in the public domain from CBN. Enhanced monitoring of FX market activities and a continued emphasis on transparency and price discovery are key priorities of the bank. Now, the governor recently disclosed that a diverse mix of investors remain keen on returning to Nigeria's market. And, you know, there were insights around foreign portfolio investors taking a very methodological approach and are on the lookout for reports from credit rating agencies. For additional color, I think it's worth highlighting that the FMDQ did show through its data that FPI is accounted for just 8% of total FX inflow into the NAFEM window in 2023. So from my vantage point, they remain on the sidelines, but the view from the CBN governor was encouraging. We're yet to see activity from that asset class. The recent CBN circulars and the governor's interview that happened recently, I think that was on Arise News, indicate a commitment to ongoing reforms, addressing our concerns about potential stagnation. Of course, there are still lingering questions, such as the unresolved $2.4 billion in FX claims, but these that I just mentioned show that progress is evident. The backlog in USD demand is decreasing, fostering some level of optimism. Now, if NAFEM and parallel market rates continue to align closely, it could provide some level of confidence, or it could allow for confidence to grow, potentially leading to some level of appreciation of the Naira. Next slide. Next slide. So next slide, sorry. Yes, next slide. Okay, so policies. Again, these are first round estimates. So we're undergoing revisions right now. But this is on monetary policy. The Monetary Policy Committee is expected to meet this month. This will be their first meeting. And so all eyes are on this meeting. We all want to get a sense of what the body language of the committee is. But just on the back of engagements that have happened, it is clear that the CBN governor at least is still tilting towards inflation targeting. And so I do expect to see rate hikes in the first half of this year. The current MPC understands that the transmission effects of rate hikes are weak in relation to combating rising inflation. So looking ahead, we do expect or anticipate a firmer handshake with the fiscal authorities, emphasizing a nuanced approach to address inflationary pressures. Now, the CBN's halt in usage of quasi-fiscal tools signals a commitment to a more cohesive policy stance between monetary and fiscal authorities. We anticipate a higher rate hike than that in our first round of estimates, which is what you can see in the slide, perhaps ranging between 100 to 200 basis points at the meeting that is set to hold. Okay, next slide. Now, this is on fiscal. Maybe I'll just speak briefly on the benchmarks. Achieving the macroeconomic benchmarks would largely depend on a handful of factors. I do agree that I think $77.9 per barrel is conservative. We currently see oil price average at about $82 per barrel. Again, this is a figure that is subject to revision given the volatility of this indicator. But at the same time, on the back of what I've just said, $77.9 per barrel is obtainable given how volatile that indicator is. On production, the benchmark is about 1.78 million barrels per day. This is feasible if it includes condensates, but if it doesn't, I'm hoping that issues around vandalism and production constraints will be resolved for this benchmark to be achieved. As for exchange rate, the 800 Naira per USD, this was slightly, I think it was about 750 Naira per USD initially, but of course, we don't know if this is attainable right now, given what we're seeing in the exchange rate market, the volatility that we're seeing. Now, with regards to debt, the debt service to revenue ratio in the budget is projected at 45% for this year. That's in 2024, and that's compared to an estimated 57% full year 2023. Now, as at September of last year, debt service to revenue ratio stood at 67%, while the debt to GDP ratio was about 47.7%. And of course, that's above DMO's target, which is 40%. However, it is still below the 55% set by the World Bank for countries within Nigeria's peer group. Just to give some stats, Egypt is at about 87.2%, South Africa about 67%. I think Kenya is about 67% as well. But I do understand that there's an approval to raise this ratio limit underway. So there are plans to raise this ratio limit. I've been hearing that. However, monitoring the debt to GDP ratio is crucial in assessing sustainability. Enhancing tax collection and improving fiscal discipline will contribute to a more sustainable debt trajectory. Before I go to the next slide, I'll just mention that we do expect to see yields of domestic fixed income instruments rise due to the FGM's borrowing plans for 2024. And of course, that is in addition to expectations around rate hikes in the monetary policy rates, and then continuous market liquidity mop-up is expected through OMO auctions. So these would impact yield movements. Okay, next slide, please. So this is a sectoral watch list. These sectors are categorized in the national account. So what I did here was to pick out sectors that sustained quarterly growth for about 4 to 5 quarters and group them as resilient. And those within unstable were unable to post sustained growth over the past 5 quarters, while the recession sector was consistent with contractions within the same time frame. Looking ahead, I have provided insights on expected direction. So if you look at the table, you would see for full year 2024, you would see where there's a view on if there will be an uptick, if it will be mixed, if it will be stable. So there's specific sectors that for now seem like they would remain stable. Some seem like they'll be mixed, so they may move from resilient into unstable. So yeah, I'm hoping that this presentation will be distributed after my presentation. Okay, next slide. This is a commodities watch list, just a snapshot. I'll just speak on the agriculture and then metals, since I touched briefly on oil earlier. The growing demand for maize for both human consumption and industrial sectors will put upward pressure on prices in 2024. Production is expected to improve due to an expansion in cultivated land and enhanced utilization of agricultural inputs. And I'm referring to maize here. Fertilizer prices are expected to decline in 2024 as supply improves, and this should support maize production to an extent. As for wheat prices are expected to decline this year due to improving global supply from major producing countries such as Russia, the United States, Canada, and Australia. Although Russia's withdrawal has disrupted the Black Sea grain initiative, forecasts assume that grains will continue to flow out of Ukraine. However, if hostilities escalate further or the Danube River becomes unnavigable, wheat prices could begin to rise again. As for cocoa in West Africa, so notably Ghana and Ivory Coast, crop diseases and unfavorable weather conditions have impacted harvest. We do expect cocoa prices to continue to trend upwards as tight supply persists. On metals, which is mainly gold, ongoing geopolitical tensions could raise the price of gold, often considered a safe haven asset. So we do expect to see elevated price levels for gold in the near to medium term. So next slide. So this is what I refer to as front burner topics, and these are topics that have come up in different sessions that I've led over the past 6 weeks. Exchange rates is one of them. I've touched on it already, but what you're seeing here is really a trend watch. As I did mention earlier, when you look at the FX inflow or sourcing trend within the NAFEM window, it shows that in 2023, FPI is accounted for about 8% of total inflows into that window. Non-bank corporates are accounted for the largest share, into that window. Now, FX inflow declined by about 5.2% year-on-year in 2023. I think the total that we saw for 2023, total turnover was about $14.31 billion. Next slide, please. Okay, this slide really just touches upon FX sourcing, FX inflow sources, and just impact on the market. So next slide. Next slide, please. I just thought to throw this in. This is aligning with consumption patterns, soft demand. It's been a lot of questions around this, given inflationary pressure and inflationary impact. Just, of course, as for businesses, they should be thinking about cost-effective solutions, flexible payment options, localized marketing strategies, innovative pricing models, adaptability and agility, collaboration and partnerships, amongst others. The next slide, please. Next. Another interesting topic that keeps coming up is that of the domestic debt burden, or where people ask if FGN would default. Well, my view is that at least in the near term, which near term for me is 1 year, the answer is no. And there are specific indicators one would look at when trying to create a view around this. Of course, the macroeconomic environment is hazy, as I said at the beginning of my presentation, but not to the extent that I believe a default is underway. So some of these indicators one would look at are economic growth. And if you recall, I did express that our projection is that of 3%. I think the IMF IMS projection is not far off from that as well, but about 3% year on year, which is slightly higher than 2.6% that we're estimating for full year 2023. So a growing economy can generate the revenue needed to service debt. Forecast points towards upticks in GDP growth. Fiscal discipline, well, that is really the onus is on the government to ensure that fiscal discipline is implemented. Debt sustainability as well. These are things that we would look at. There are specific ratios that one would look at, such as debt to GDP ratio. Of course, the revenue as well. So that is something else that we would be looking at with regards to making a call or giving a view around if there will be a default or not. Currency stability and external reserves is another. Monetary policy effectiveness. So again, we are all keen on seeing how the meeting pans out this month when the MPC meets. Of course, access to international markets as well. As for now, the ICM seems inaccessible to countries such as Nigeria. But I think a few weeks ago, there was some news around the Minister of Finance expressing that Nigeria could be tapping into the market towards the end of the year. However, there are economic fundamentals that would allow for that to come into fruition. I think commitments to debt service as well is another indicator of that would be looked at if one is trying to create a view around a default or not. But my nutshell response to that is that in the near term, I doubt that would happen. So next slide, please, which I think might be my final slide. Next slide. Okay, what I did here was just to put key priority FGN spending areas and what that should mean for businesses. When you look at the budget, allocation to infrastructure was about 5% of the total budget. Defense and security gulped about 12%. Education accounted for about 7.9%, while health accounted for 5%. Different industries may experience varying levels of growth and opportunities based on their alignment with budget priorities. Businesses should align their strategies with these priorities to maximize their prospects as best as they can. Capital expenditure components within the budget bodes well for infrastructure-related industries such as construction, engineering, and real estate. Projects aimed at improving transportation, energy, and telecommunications infrastructure will create opportunities for businesses in these sectors. And of course, this bodes well for public-private partnerships. I think I also mentioned that government procurement, for government procurement, industries related to defense, security, education, and healthcare may benefit from government procurement contracts and partnerships. So companies should monitor procurement opportunities and engage with relevant government agencies. The education sector is likely to witness more funding for infrastructure development, teacher trainings, and educational technology. And this presents opportunities for education service providers, e-learning platforms, and companies specializing in educational materials and technology. So next slide. So thank you so much for giving me your attention.
Okay, thank you very much, Chinwe. Chinwe has mentioned that she's currently ill, so we'll let her go. So my job next is just to steer the panel discussions. And I'll just do briefly to introduce the panel members. Let me just pull up their names. Yeah. Okay. So on the panel today, we have three people. Firstly, with Mr. Wole Ogundare, who is the managing partner at Carthena Advisory, which is a financial management consulting firm. Mr. Wole brings 27 years of experience at a senior position He was previously Managing Director at Udala Limited. Also worked with Insight and Phillips Consulting. He's a fellow of the Institute of Chartered Accountants, alumnus of London Business School and Wits Business School, South Africa. We also have Ms. Ibirionke Orhiunu, pardon me if I get your name wrong, who is an associate director at Deloitte. She brings over 17 years of professional experience. She holds first degrees from the University of Lagos, and she's also an associate member of the Chartered Institute of Tax, CITN, a fellow of the Institute of Chartered Accountants, and also a member of the Chartered Institute of Stockbrokers. She's led teams in corporate advisory, tax planning, tax reporting, and she's an expert in fiscal policy and taxation. The last panel member we have is Dr. Nnaemeka Obiaraeri. Pardon me again if I get your name wrongly. He's the managing director of Taurus Capital and Advisory, a Pan-African investment banking firm. He's held several positions at several banks, Legacy Express, Bank PHB, FutureView, Treasure Capital and Trust, Oceanic Bank. He's an alumnus of the Abia State University, where he graduated with a first-class degree in banking and finance, and he also holds advanced degrees from Leeds Metropolitan University and the Harvard Kennedy School of Government, Harvard University. So before I don't know if everyone, okay, I can see Ibirionke. Okay, good morning, everyone. Before, what I'll just try and do is just share a few slides. Basically, I'll just try to blend some things from what Chinwe was saying. So I'll just, permit me just to share a screen if I were to summarize what Chinwe was saying. So I think overall, broadly, Chinwe seemed to be hinting at, just to summarize everything for our audience, on the economic growth picture, the IMF and most forecasts for the Nigerian economy seem to be hovering around 3% for 2024. The exchange rate still remains a big issue. Only in January, we've already seen the currency drop by almost 40% officially. Inflation still remains quite high. Most people think it will still remain quite high. And of course, the budget is expansionary. The government is spending a lot, mostly driven by debt service and rate of capital spending. And interest rates generally, I mean, yesterday we had a treasury bill auction where the 1 year closed at an effective yield of around 23%. So in general, against that backdrop, I think I'll just first of all start with Panelists. Said against that backdrop, last year we had very big adjustment. I mean, the big change was in political leadership. We have a new president, which then melded into changes in policy. So basically on the currency in particular, the currency, petrol prices, and we also saw what happened last year. Inflation ran up quite strongly last year. So to my panelists, what do you think about these changes? How do you think they'll shape up in 2024? What do you think? Do you think some of these changes were, I mean, the timing is right? Do you have any thoughts about implementation? In general, just what are your thoughts about how the policy environment has changed over the last 1 year and how you think it will impact 2024? What are your thoughts in general? So I'll start with Mr. Wale.
Thank you very much, Wale, and good morning, everyone. Thanks for being here. Thank you for having me on the panel as well. I think for me, primarily, if you look at the policies, let me start with the monetary side of things, where, you know, the polity has been very, very heated around the monetary side of things. I think what CBN is doing is a bit commendable. And I speak to some of the policies before the Senate right now. Two major policies that I see before the Senate that they're deliberating on. One has to do with, you know, you can't spend foreign currency within the Nigerian environment. Keep it at the Naira. I think they've released a policy on that. The second one, which I think is far more important, seems to point at corporate governance issues. So the power of the CBN governor they're trying to find a way to lower the power of the CBN governor. Let me just put it that way. Appoint a chairman, appoint a few more members, e.g., the president of CIBN will be there, and so on and so forth. Sort of trying to create the right corporate governance environment around how CBN has traditionally operated. Also, I see that they're saying that if you've operated at the CBN board in some sort, you can't venture into politics, for the next 3 years. We saw what happened to Emefiele, during the last elections. And now people felt, look, this is, rather a bit unethical. So some of those issues they're trying to cure from a monetary perspective. So if you look at that, for me, I think it's a step in the right direction, per those policies. Now, when it comes to looking at inflation, contraction of the economy, are we going to expand? Are we going to contract? I am a firm believer that inflation is supply driven. I don't think we can cure inflation with, the various monetary policy adjustments, because you can only adjust so much into monies that you have, as a country. Today, I'm sure if I ask anybody in the CBN what exactly is in our external reserves, a few people will stutter before they answer that question. So for me, my primary has always been, look, how do we find a way to improve inflows from the supply side, as well as look for ways to also encourage local industries that will employ labor. Now, I know a few people, let me just mention one sector that people may latch onto, the plastic sector, particularly the renewables sector, as an example of how, that sector depends solely on the Naira. It's not a lot of import dependency. The raw materials also have viable markets as well. Because if you look at the renewables around the plastics, which is why, I like to talk more on the supply side of things, we have about some 28 million tons of solid waste. I think about some 4 million tons of that is plastic. So government has established a few renewable, things around the country, but the major issue around that sits with power. This conversation will go in a big circle. Now, when you start to talk about power, then we are right back to the infrastructure conversation. So if you look at Chinwe's presentation around weak infrastructure, it begins to tell you that as a government, if you say, look, we're trying to expand this economy, there's no way that you cannot, look at the infrastructure conversation. Give me a minute. Let me just dive into that briefly. Around infrastructure, which is one of the things I feel, again, will expand this economy, there's a document called the Nigeria Integrated Infrastructure Master Plan. It was prepared in 2013. It was updated in 2022 by the Buhari-led government, where they themselves said that, look, across infrastructure, across the 6 geozones, we're looking at energy, transport, ICT, health, education, security, water, mining, agriculture. Over the next 5 years, Nigeria needs to spend an average of $150 billion to bring our infrastructure up. Now, why is that? Our infrastructure to GDP ratio in Nigeria today is around 30–35%, which is extremely poor. That plan, done in 2013 and updated in 2022, like I said, is a plan to say that, look, how can we pull our infrastructure to GDP ratio up to about 70, 75, 80% over a 30-year period? So it was a document done in 2013 to run 30 years till 2043. Where we have, 20 more years to go. And not a lot has been done between 2010 and 2023. So we were meant to spend about $30 billion when it started, for the first 5 years. All of a sudden, by 2023, we now need to spend $150 billion because nothing has been done. Now, this is my take, reading that document. if your infrastructure to GDP ratio is poor as a country, there is no way you can develop. Somebody needs to write that down. If your infrastructure to GDP ratio is poor as a country, there's no way you can develop. So a lot of the initiatives, that are being touted, there's only so much that those things can do because of a poor infrastructure base. It is why you see a lot of Nigerians, when it comes to education infrastructure, leaving the country. And I always say the best of us are leaving already. So for me, those are the sides of a conversation, I like to focus on, a lot less on the monetary policy, because like I said, you can only manage so much, in terms of what you have as a country when it comes to, managing reserves. Because if you look at the major function of the CBN, you will see that, you can only manage so much as you have. For me, a lot of work needs to be done on the fiscal side of things, not just taxation, which we've heard a lot about, because again, you cannot tax your way into prosperity. You need to create a base and then apply the taxes, which is why I feel a lot of work still needs to be done to actually begin to expand this economy. Those will be my initial thoughts. Thank you, Wale. Wale, you're muted.
Hello, maybe just to try and throw something, provide a bit of context. I think just for everyone else, and I guess maybe more on Ibirionke, just to your side. I mean, we've seen the 2024 budget, which has been passed. It's pretty expansionary. I mean, it's a very high number, 27.5 trillion. Meanwhile, the revenue projections are around 18 trillion, assuming we get to those numbers. And so it implies a very huge deficit. Now, one of the first things the Tinubu administration did was to set up a presidential committee on fiscal reforms and tax reforms. And the committee has so far been at work as a fiscal policy expert. Okay, what are your thoughts on what government can do to drive revenues? Because as Chinwe said in our presentation, our debt to GDP ratio is quite high. Debt service is also a problem for the government. And so what initiatives do you think they can do that will, one, increase government revenues, not at a level that disincentivize or presents itself as a disincentive to businesses or prevents people from investing in the economy? How do you think, what cocktail of fiscal reforms do you think the government can push through that would ensure that we have some balance on the fiscal balance, as well as also provides enough signaling and incentives for private businesses and foreign investors looking to invest in the Nigerian economy? Thank you.
Thank you very much, Wale. And I'll just take a cue from what Wale said, saying that you cannot tax your way into prosperity. The issue of taxation, it's quite sensitive. You see that quite a number of companies, what happened to them, I'll just take a cue from what happened last year. Due to the volatility, for instance, in the exchange rate last year, we saw a number of companies, right, quite being affected by the exchange rate issue, which caused a dip in the profit of a number of companies compared to the profit they used to make before. We saw a dip in that. But that being said, like what you said, we've seen what the government is also trying to do in terms of seeing how to reform the fiscal policy, how to ensure that, yes, they are not taxing the seed, but they are taxing the profit. So in other words, you see that the committee is being set up by the government, which is being chaired by Chinwe Egwim, a tax expert who was one of the big four. Prior to now, they are really working to see how there can be reforms that would encourage sustainable growth in the economy. And part of the things they are doing or pushing forward, if you look at what happened last year, part of the committee had some quick wins, which they put forward last year, which we saw. Things like we had VAT suspension on diesel last year, which is going to be for about 6 months. We don't know if the government will still extend that. And that was just to help also cushion the impact of the cost of production, because we all know that, yes, a lot of companies, this affected their cost of production. So the VAT suspension was to help them in that regard. Also, we also saw one of the quick wins was the tax waiver on CNG, cost of the removal of petroleum subsidy. One of the things the committee also proposed was the waiver of interest and penalty, which was like a month window last year, to encourage companies to come out, if there are aspects of taxes or anything you've not been compliant with. They gave companies about a month window to come out to clean their records, and they were not being penalized last year. So those are part of the things we've seen. Going forward into 2024, we've looked at the budget, like you said, we have a budget of about 28 trillion. We have revenue of about 18 trillion, meaning we have a gap of about 9 trillion to cover. How does the government intend to, cover that gap? Recently, the Federal Inland Revenue Service, for instance, had their retreat sometimes in January, and the target they released was about that they were looking to make about 19 trillion in revenue collection. And just like what Wole said, that people, they shouldn't tax the prosperity of people. But truth being said, if you look at tax, we still have a lot of gap. The government still has a lot of gap to cover. Based on the report by the Presidential Committee chaired by Taurus, that we still have about 20 trillion in taxes due to tax evasion and due to inefficiency in the tax collection system. So if you look at that, that means there's still a wide gap for government to even improve on tax collections. But that being said, what they need to do is not to go after only companies that have been complying. What they are seeking to do is also to expand the tax net. Are there people within the tax bracket that have not come in? And one of the things you see them doing is the use of technology to be able to achieve this, because we can see that without technology, you just realize that probably only the few companies or few individuals that have been complying are the ones just within the tax bracket. Because if you don't have the right data to go after people that are not complying, how do you intend to bring them into the tax bracket? So one of the things they intend doing, if you look at, is to also increase the spending on technology, meaning that they want to spend a lot in terms of technology to be able to get information to be able to get information. And that would help also, like I mentioned, to bring in more people into the tax bracket without necessarily, stretching too much of those people that are already complying. One other thing the government also intends to do is also to see how to improve our tax to GDP ratio. The last statistics we have is that the tax to GDP ratio is about 10.8%. But over the next 3 years, one of the things the government is seeking to do is to be able to improve our tax to GDP ratio to about 18%. If you look at South Africa, does about above 20% currently in their tax to GDP ratio. So also things that the government, we are also looking at. One of the comments they made was they are not seeking to tax the seed, but rather tax the fruit. So we might also see things like, government coming up with revamping policies for companies to see, maybe like, for instance, at the moment, we have minimum tax in place for companies. Even if you don't make profit and you're not exempted from paying minimum tax, you have to pay a 0.5% on your gross revenue. So if they're looking at it that, okay, there's no tax the seed, let's tax the profit. Maybe one of the things they might also be looking at is to look at things in that direction to see how they can also help ease companies in that light. And also we've seen the increase that government also increased the excise duty rate on certain items. And we are also seeing that last year we also had about 0.5% levy on eligible goods imported into Nigeria from outside Africa. And one key thing also is to generate more revenue in terms of taxation of like gains on digital assets, taxation, expanding the tax net. So we have some a lot of things going on in the digital space, but our laws are not yet so strengthened to be able to capture and bring all those people into the tax bracket. So the Presidential Committee is really working to seeing how we can update our laws to bring in, generate a lot more revenue from even the digital space. We have those social media content creators and a lot of things going on that those such revenues are not yet being captured fully within the tax bracket. So we'll see a lot of things in that space to start taxing such revenue or bringing them more into the tax bracket. Thank you.
Okay, thank you, Ronke. I just want to bring a last panel member onto Dr. Nnaemeka. I think one key issue that's topical right now is the currency. And I suspect if you ask someone, most people want to know where the currency is going to settle. I mean, last year, Naira officially dropped over 50%. Sorry, almost just under 50%. This year, we're down around 40% as well. So the question everyone keeps asking every single day is, where are we going? Where is it going to end? Is there a bottom? I mean, some of the reforms that have been, the central bank has pretty moved on to a floating or a more flexible exchange rate regime. And some people say it's because they don't have the reserve levels to be able to defend the currency at the current levels or at prior levels. And so simply they just let it to go. I guess the question for Nnameka as well, maybe all our panelists can chip in after him, is where do you think, what do you think we need to, or what steps do you think our policymakers need to do to sort of stabilize the currency? We've had a lot of, over the last 1 week, we've had a lot of circulars that come out of the central bank, initiatives being pushed. Many people say it's positive, but to the man on the street, they always say, well, the exchange rate is still 1.5. Nothing has really changed. So in your words, what do you think are the problems that's driving the current Naira weakness? What do you think our policymakers can do, if you think they can do anything? And where do you think we're headed? Thank you. Okay, your mic is on mute.
Okay, thank you so much. Thank you so much. You see, you know, there is something we must have to look back fundamentally when we are addressing the Nigerian economy. You know, most people will tell you all these parameters and indices that we mount. Oh, tax in Nigeria is 6% or 7% of GDP. In South Africa is 20% of GDP. And in other places and other climes. We just need to sit that back and ask ourselves this question. There are fundamentals and parameters that support most of those indices that we roll out. I'll give you an example. If you look at it, if you look at Nigeria economy from debt to GDP side, you would think, oh, this country is doing so well. Japan, debt to GDP is about 250%. The US, debt to GDP is about 130%. Even in South Africa, debt to GDP is almost about 78%. External debt to GDP. Now, ask yourself this question. How come the Japanese economy is buoyant? American economy do not have the kind of hemorrhaging we have in Nigeria? While we parrot these indices, we need to ask ourselves this question. The basic foundation of each and every one of these economies, they are very productive. The institutions of the states are very, very strong. Take, for example, South Africa. The capital market of South Africa has a massive debt, almost about $1.3 trillion. Nigerian capital market is about $39 billion. You saw the rally that we had in the capital market. Some companies reporting 1,000% return on investment. And everyone was clapping. I would say that there's such. But fundamentally, as an investment banker, we should ask ourselves the question, what was driving the surge in the capital market? There are fundamentals and foundations to back those surges. The answer is capital, no. Look at the companies that were driving 95% of the surge in the capital market. You will see clearly that the market was being manipulated by many who wanted to stay on the FOB list. The institutions are very, very weak. SEC is weak. NSA is weak. In a country where we have strong institutions like we have in the SEC in the US or in South Africa, we will sit back and ask ourselves, hey, how did a company turn out to 1,000 on investment? What are the fundamentals and what is driving it? But this is Nigeria. Now, what do we do to stop the bleeding? I've always argued there's no country that does not have FX strategy on how they want their foreign currency to be or the value they want it to be. Take, for example, the Vietnamese. The Vietnamese dong is almost about 24,000 dong to $1. If you compare it with the Naira, you will see that, it is grossly devalued. But the Human Development Index in Vietnam is about the hedge is about 0.74. The poverty is practically low in that area. Why? The Vietnamese produce and export over $356 billion worth of commodities annually. On net balance of trade, they have surplus, but they deliberately devalue their currency to enable their export to be very cheap. They are very productive. The Chinese have deliberately allowed the yuan to remain at the level it is. They manipulate it from time to time because the Chinese are decided to become the productive hub of the whole world. Today, China has over $869 billion in the US Treasury bills and securities. That is what the Chinese want, according to their own currency strategy. Nigeria today, see, that we floated the currency does not mean that the CBN cannot intervene from time to time. But what we can also intervene with? The currency, like every other commodity, is determined by the role of demand and supply. Nigeria as a country has capacity to produce and export nothing less than $300 billion worth of goods and services. Nigeria as a country has capacity to attract foreign diaspora investment of nothing less than $50 billion annually. The little $25 billion that we receive annually, actually 5% or less than 5% of the income that most of the 5 million plus diasporans earn. They just send it as pittance and remittances to help the suffering dependents here in Nigeria. If we have a strategy in place to provide enabling environment to make things happen the way it should be, just like those other clubs. The diasporans, we don't even need to beg. The greatest investors that will come into Nigeria are our huge diasporans. But even the diasporans themselves. A guy told me a story about how he inflowed 10,000 pounds and saved it in his dorm account. And then he turned it to Naira to do some trade within Nigeria. By the time he took that 10,000 pounds from a bank in the US, in the UK, by the time he changed back the Naira to pound sterling, he only got back 2,500 pounds. He's now owing a bank 7,500 pounds because for what he did not consume or money he did not waste because of the instability in the land. So what do we do as a country? We need to tackle the fundamentals, which is the physical and constitutional foundation of this country, which nobody is looking at. Kadoso Yemi cannot defend the Naira with his blood. There must be more dollars in the treasury for him to be able to defend the Naira or even manage the float. Now, what is the source of the dollar? 94% of our forex earning comes from crude oil. In 2011, we did 2.5 million barrels. And within that 2011, the opposition was even accusing the Jonathan government of stealing 400,000 barrels every day. Jonathan handed over 2.3 million barrels of crude oil daily output to Buhari. Under Buhari, we lost everything. There was even a time we were not doing up to 1 million barrels. Melekari told us gleefully before our Rise Next TV that on a monthly basis that we lose $1.9 billion worth of crude oil to thieves and inefficiency. $22 billion lost annually. Till today, that stealing had not stopped. That bleeding had not stopped. Nobody was arrested. Nobody was prosecuted. In a country where even the NNPC tells us that they have surveillance equipment that enable them to monitor all the assets and the waters. How did we lose on an annual basis over 1.3 million barrels of crude for 5 consecutive years and nobody asked questions? On the downstream sector, NNPC, when Kachukwu was the petroleum minister for state and NNPC GMD. Kachukwu did his forensics and discovered that the 47 million liters we claim to was more than what we actually consume in the recess of it. So what did Kachukwu do? Kachukwu conducted a study and Kachukwu discovered that what we are actually consuming was about 32 million liters of PMS every day. And it remained at that level. In 2016, Kachukwu was removed and Mike Antibaru was appointed as the GMD of NNPC. Out of the blues, daily consumption moved to 66 million liters a day. Before you knew it, we were doing like 3 million liters a day. Before you knew it, they told us it was 102 million liters of PMS a day. NNPC was the sole importer. Nobody bothered. There is no institutional framework to checkmate what was happening there. Before you know it, when you ask them, they will tell you, oh, Nigeria was paying for that import. They will tell you the products were being smuggled, over 50 million liters of PMS. Off the cuff record and computation, to smuggle 50 million liters of PMS across the borders of Nigeria will take about 12,000, will take about 1,800 trucks lined up 12.7 kilometers back to back. And if you look at the consumption within the West African region, from Cameroon to Niger to Benin Republic, our neighbors, their total annual consumption, daily consumption, was not more than 9.6 million liters a day. So what happened to the excess? Nobody asked, nobody wanted to find out. Now let me explain to us. For us to show up the supply side of the dollar, we need to, first of all, those oil wells that were producing 2.5 million barrels, if they were capped, they can be entered and opened. The federal government of Nigeria should consistently and sincerely ramp up output to enable us earn forex from that sector. Then
but don't you think
valued at about $60 billion.
Yeah, sorry, Doctor, don't you think that would require some foreign investment? I mean, what we tend to see these days is the IOCs are leaving or selling their stakes in Nigeria because it appears the tax things. So is it that the government can't just go and raise output because it costs money at the end of the day? So if the IOCs aren't interested in investing to expand production, then is that not more a fundamental issue than
okay? Let me explain to you.
Yeah.
We don't need the IOCs to bring investment in the whole value chain of the oil and gas sector if we put in place the enabling, transparent, institutional, physical, and governance framework in place that engenders transparency. There are diverse funding arrangements that can be used to develop that sector.
Okay.
Now I'll give you an example. Why are we borrowing $3.3 billion from Afrexim? NNPC borrowed $3.3 billion Afrexim at SOFR plus some percentages premium, 11.8%. And then we paid facilitation fee of 2%. The NNPC today in valuation is bigger than the whole of Ghanaian economy. NNPC is valued at about $60 billion. Now, look at the same Ghana Commodity Board, the Cocoa Commodity Board in Ghana, borrowed $750 million syndicated financing for 10 years. What was the rate? 6.5% all in. Why would Nigeria borrow NNPC, as wealthy as they are, borrow 5-year money at 11.85% with some collecting fee of 2% flats, and then collateralize it with crude oil that is worth over $12.5 billion in today's world at a discount of $65 per barrel. When historically, if you look back over the last 24 months, the average price of oil has been $82 per barrel. And projecting into the next 2 years, go and look at the analysis. There's nowhere it was whether the dollar will go down below $70. So
I think where we're trying to go to really is what maybe if you just summarize in, because we like to do Q&A, what top 3 things, if we made you central bank governor today, what top 3 things would you do to stabilize the FX situation, Doctor?
The CBN governor on his own cannot stabilize. You guys are placing the horse before the cart. What do we do? NNPC is 170.
So what 3 suggestions would you have? Yeah, what 3
things that will happen?
Yeah.
NNPC today is worth $60 billion. LNG is working because it is owned 49% by federal government and 51% by private investors, corporate governance. Let the federal government of Nigeria divest 55% of their holding in the NNPC assets. That will bring in about $32 billion. That one will take long. They can appoint a JP Morgan Chase, and then they can take a bridging facility of about $15 billion against the diversion that will take almost about 6 months to do. When you do it, the NNPC will become more efficient as the Petrobras, as the British Petroleum, and then you will see it is no longer going to be a case of what president determine who becomes the board chairman, or just like we have seen over the last 3 years. They've changed the board chairman of NNPC more than 3 times. And then number 2, we need to enhance productivity. And to enhance productivity, we must tackle insecurity. To tackle insecurity, we must devote security back to the communities. P2B in Anambra State. was a nest of criminals. P2B came and asked the communities to donate their sons, 50 of them. He gave them high-loss trucks, innocent trucks, gave them guns and trained them, and they chased away the criminals. If you don't chase away the criminals, there's no way you will have productivity across the value chain.
Third option, Doctor. Yeah.
The third option, the EFCC and the Central Bank of Nigeria must up their games. 60% of the criminal demand on the dollar are from politicians. Net, Nigeria had over $162 billion dollar inflow, net inflow over the last 8 years. Where did the money go to? And they should stop. They should stop all these ways and means they are doing. Ways that means is printing naira, and what they do use naira to do to go and chase dollar.
Okay. I think we'll just draw that to a close. Thank you. Thank you, Doctor. Yeah. I don't know. So I think we've run quite ahead. What we'll just do is maybe throw the floor open for Q&A if we have any questions. And if you have a question, please signify, and I'll draw you up. I think one thing to note is that this is not a political platform. So what we're trying to basically discuss is ideas, not individuals. I think it's important we clarify that. It's very important we clarify that this is supposed to be about ideas, not about individuals or political parties. Importantly, we just wanted to talk about the currency and exchange rate, and it's important that we should stick on that. What ideas do we think? The Central Bank has put forward a series of policy measures in recent days, some of which people have said, you know what, is been positive for trying to stabilize the exchange rates. And I think I don't know if anyone has comments on that as well. But otherwise, I'll just open the floor and take questions. I see Okay's hand is up. I'll just unmute Okay. Okay, go ahead.
Okay, thank you very much, and thank you, Wale, and all the panelists. I will start with something the last speaker, the last panelist said about the returns on the market we've seen in the past. But meanwhile, I'm okay, I'm not chief economist at the SEC. I want to say a few of the reasons why I think our market performed the way it did. Historically, our companies have been undervalued because of the low liquidity in our market. If you look at relative P ratios over the past 10 years compared to other markets, you would agree with me. Secondly, we have had a lot of money supply in the past few years. We had a very large ways and means money in circulation, money supply, and a lot of money supply. And that money has to find somewhere. Part of that money, we believe, went into equities, and that's what you saw. And thirdly, we saw that money market funds and fixed income didn't return so much. So a lot of flows went from there, Wale, you know that, to equities. And that's why you saw our market do the way it did. And I want to clearly say that we haven't seen any evidence of market manipulation anywhere. And I will not agree with Dr. Nnaemeka that the SEC is a weak institution and that there's market manipulation. But we are open. If he sees any evidence of market manipulation, the SEC will be very happy to receive such evidence, and we would investigate. Now to my question, sorry to have taken so long. To my question, it's about the money creation by banks. We all know that the central bank has asked banks, they have this loan to deposit ratio thing of 65%. So they are encouraging banks, or they have for many years encouraged banks to lend. But we know that bank lending creates even more money. So if our problem is too much money in supply, a high money supply, and it's feeding into inflation and feeding into, pressure on our currency. What do you think about this policy of the central bank? I mean, the central bank is in a dilemma here. People are saying the real sector is not receiving credit, but at the same time, in giving that credit, banks are creating more money that is causing more problems. So if you were to advise the central bank, what would you say they should do? Some people are of the opinion that the LDR should be removed, the requirement should be removed, or whatever, but I just want to get your views. Thank you.
Okay, so I think okay. Thank you for that rebuttal. I think as a capital market investor like myself, I think I will also share your views. Last year, really, I mean, the last 4 years also as well. You've also seen the equity market have gradually picked up more, primarily because really more domestic investors have been involved, less of the offshore guys, and also because rates have been quite low. But just to summarize your questions, your first question was on the FX was what I don't know if you can, if everybody got his questions. There were 3. The first one was on what ideas you think. Okay, can you help me out here? I don't know if, yeah, just want to summarize the questions for the panelists. Hello? Okay, yeah, okay, yeah.
Okay, I was muted. I actually have just one question. I was talking about the central bank's loan to deposit ratio requirement of banks. So that what should they do?
Okay, so who wants to have a stab at that? Wale, do you want to have a stab at that? Okay.
Yeah, thanks a lot, Wale. Good question. Okay, when it comes to loan to deposit ratio, among these banks, like you said, the CBN itself is in a bit of a problem. So it all boils down to how they want to control inflation. You know, do we release more money or do we not release more money? Look, my primary challenge, let's look at it from the view of those that they are lending monies to. My primary challenge is that these monies are coming out at close to about 30%, you know, interest rates to you know, the manufacturing sector. I work with them a bit, so I see what's going on there. Now, you're saying let's find a way to restrict, you know, these same funds, you know, going to these guys because you feel the economy is awash with funds. Look, there's been a lot of studies in the past that have pointed to the fact that the bulk of our cash is in the informal sector. It's not in the banks to even start with. That's the number one and primary problem, which is why I always say that Nigeria's issues are a lot more fundamental than we just like to look at it from. And I'll tell you why. There's a gentleman in the marketing world called Gary Vaynerchuk who said that content is king, but context is God. If you want to address the Nigerian issue, you have to understand the context. In this case, trust that people have within the system and the various, you know, regulatory agencies, which is why for me, and this study I'm talking about is way back sometime 2006, you know, that said the bulk of our funds lies in the informal sector. This is 2024, about 18 years later, and I don't think much has changed. You know, so that issue of saying, you know, do we increase loan to deposit ratio? Do we scrap it? It's something that I think my view will be just maintain status quo as a CBN, maintain status quo, leave it. And then it also, one more thing, in terms of the direction that the government is trying to travel, look, I love Indonesia. I did a bit of work in Indonesia in 2015, 2016. You Google a bit about Indonesia. As a government, you have to say, look, this is what I'm trying to do. The problem we have in Nigeria is that we're trying to do too many things at the same time. Therefore, we're creating, you know, all sorts of lopsided issues. If, for instance, we say that, look, as a country, you know, we're trying to do X. For instance, we want to use agriculture, you know, to drive development in Nigeria and in West Africa. If you say that as an example, then you know how to, you know, address your loan to deposit ratios. You know the people who you want to give funding to. You know the areas that you want to address in terms of vital registration and security. The problem, I think, has always been in the context. We have always tried to model our economies around European or US or all these other economies without understanding the context. We have a very peculiar context that we must pay attention to. Therefore, if you pay attention to that context, the way in which, you know, as a government, you address all LDRs and all sorts of other indicators, you know, will be a bit more circumspect and will speak exactly to the pains and the needs of the people. That's how I'd like to address that. Back to you, Wale.
Okay, thanks, Wale. Maybe to provide a bit of context, I think, okay, to your question is the LDR, as we all know, the loan to deposit ratio. I think why the central bank is pushing at that, or why the central bank has pushed at it, is because I think under the previous central bank governor, they noticed that a large chunk of bank balance sheets were, because you had high yields on government securities, you found that a lot of banks were starting to put a lot of their balance sheets in investment securities. And you don't want that as a central bank, because you just want to strike that balance. If banks are generally financial intermediaries and should try and grow credit to the real economy, most of that credit is in risk-free government securities, then maybe you don't want to. And so that's why that policy was instituted. Some people didn't like it because they feel it's a bit crude. Usually you want, using the policies of interest rates, if you think interest rates are too high, or if you don't want to disincentivize it, then you pursue a low interest rate policy. That's what conventional market people will tell you, that, you know what, if you want to stimulate lending, just bring down interest rates, then banks will take the signal and look for risk and basically move up the credit curve to try and support their use. But if, on the other hand, because of inflation and currency issues, we don't want to do that, we want to use interest rates, then of course it becomes problematic. And I think that's why they've done that. But my sense is, ultimately, I think Nigeria has some peculiarities, and policymakers will look at it. Ultimately, I think if where we stand today, money supply has grown quite rapidly over the last 3 years, largely driven by the FX depreciation you've seen. And so most people will say that I think the IMF advocates that, look, Nigeria needs to tighten policy at this stage where we are. And to try and tighten policy would mean that we try and rein in on money supply growth, just to try and manage the current situation. Because ultimately, what drives currency depreciation generally is demand, and that demand is what Naira. So if you wanted to try and manage the pressures you're seeing, you want to at least control, or at least raise the rewards for holding Naira, so as to slow down the pace at which things are moving. I don't know if there's any more questions. I think Soji's hand is up. We'll take Soji's question if he's. I think I saw Soji. Yeah. I'll just go to the chat to see if there's some questions in the chat room. I think someone asked, how does bank recapitalization affect the economy? I don't know if someone wants to take a stab at that. How does bank okay, I think Dr. Nnaemeka, how does bank please let's keep conscious of time. Yeah.
Please, can you repeat the question again? How
does bank recapitalization affect the economy? Yeah, I think the central bank earlier this year, the central bank governor had mentioned that at his speech in December, that the central bank would look to raise capital buffers. Typically, when countries go through big devaluations or currency crises, you typically find the health of banks. People tend to worry about the health of banks and say, okay, you know what, maybe you need to raise capital levels to a level that your banks can support economic activity. So I think someone is asking the question that, what do we think? How do we think that impacts the economy if the central bank, although the central bank hasn't come out to say what exactly the new capital levels are. So I think the question just really is, how do you think it affects it? If they were to raise it some number, what is the impact on the economy? Is it positive, negative, and in what sense?
Okay, for me, we've been through this route before in 2005 and under Charles Soludo. I don't think what we should be focused on is for the federal government of the Central Bank of Nigeria to adopt the same fiat mode of compulsory asking banks. There's no bank board of management that does not see what has happened in Nigeria and the need for them to recapitalize and shore up their capital base, where we have an efficient market and where things are done normally. Banks can easily go to the market to recapitalize, people will buy their shares. Now, I think what we should be looking at is how do we drive financial inclusion? Somebody mentioned here that we have a very...
Sorry. I think the question the person was asking is, how does it impact, so that we don't...
Okay. Like I said, if we force the banks to recapitalize, they will. Let me tell you the truth about that. Most of them will still go back and do what we normally call in and out. That's the truth. It's going to put so much pressure. They will play games to undercut the system, and then at the end of the day, the market will suffer for it.
Let's assume, Doctor, let's assume that they do things the right way. So they raise capital. What is the impact on the economy?
If they do things the right way, of course, it will positively impact on the economy. When you have banks that are fully capitalized, it will also create avenues for them to lend. And beyond that too, I also think the Central Bank of Nigeria should go the extent of discouraging banks from providing facilities to government, state government, and local government area. If banks are recapitalized fully, and the federal government of Nigeria, if any state or municipal want to raise money, they should go to the capital market. That is normal thing to do. If they are recapitalized, CBN should go ahead and bar them from extending credits to government so that the private sector is not crowded out. Any government that wants to raise money should approach the capital market.
All right, thank you. I think Nuruddin has his hand up. Nuruddin, can you go ahead with your question? Okay, Nuruddin, your hand is up.
Okay. Okay. So, good morning, everyone. Okay, so my own question seems to be,
Nuruddin,
addressed
can you speak up a bit? Can you speak up a bit? Yeah.
Okay. So my own question seems to be addressed to Ibirionke, and it's actually on tax. Okay, so in this country now, we know that informal economy is actually higher. So how do we ensure that they actually pay a fair rate of tax that's not, that is not in the same, rate or
that does not disincentivize economic activity, right?
Yeah. So,
yeah.
And also, how do we ensure that the net is actually cast wider to ensure that at least it
increase coverage, tax coverage, right?
Yeah.
Okay. So 2 questions for Ibirionke, I think, is how do we raise taxes to a level that is supportive of activities in the informal sector of the economy? So what levels? Officially within the official sector is 32, 33. Is that number sort of feasible for what sort of levels do we think we need to move it to for the informal sector? Firstly, secondly, how do we expand? What measures do you think the government can do to expand tax coverage? So the problem always is that people always say that in Nigeria you have a lot of people don't pay taxes or tax evasion tax. So what do we need to do to increase tax coverage? Thank you.
All right, thank you very much. Like I mentioned earlier on in the course of my, when I was speaking, like I mentioned earlier on, one of the things that the Presidential Fiscal Committee and the Tax Reform Committee is seeking to do is to look at how to bring in a lot of people within the tax net and not just limit it to those already within the tax bracket, right? And one key thing that needs to be done is, which the government is seeking to do, is to invest more in technology. Because if you don't have data, how do you get to bring in those people in the informal sector? We just keep on going about, oh, we have this, a lot of revenue in the informal sector. So a lot of things needs to be done. And in terms of technology, in terms of the government agencies and parastatals working more together as one, in terms of synchronizing information, because right now what we see is that maybe you see some certain arm of the government have information about businesses or this informal sector, but maybe another arm of the government doesn't have that information. So what they are seeking to do, based on what the president of the committee said, is that they're going to have what they call the tax data, right? And this is like going to get information from all across, so that we are not just, it's not just a few people that are paying taxes and funding the economy. Everybody is being brought into the tax nets. Pay your fair share of the taxes. One other thing that the committee is also seeking to do, what the government can also do, is to make the payments of taxes much more easier. Like, for instance, at the moment, we have about 60 taxes, and we are just generating revenue from less than 10 taxes. So what they're also seeking to do is to make taxes a single digit, look at how to like aggregate those taxes into just less than 10 taxes so that you don't have the issue of revenue leakage is being minimized. The second question is on expanding the tax coverage. I think I've answered that indirectly. It's just they need to get information. Technology, of course, by the time you get that information, you're able to expand the tax coverage. And one key thing, like I mentioned also earlier, it's like, though, if you look at those in the digital space or skit makers, those making influencers, a lot of people are not, you don't have, a lot of people are not yet within the tax bracket. They are making so much money, but we are not capturing it. And I know that in this year, 2024, the government is seeking for ways to bring all those people into the tax bracket. Like, for instance, if you look at what is happening in our digital space, for instance, a lot of revenue is being made now due to amendments in the Finance Act in the last 3 to 4 years to bring in people in the digital space. So based on the statistics of the National Bureau of Statistics, I think they said they made about 2 trillion in 15 months from the likes of Netflix, Google, and the likes. So there'll be a lot more tax reforms coming into place so that if there are any aspect of our tax law that is not letting the government get revenue from these guys in the informal sector, a lot of things will come into place to bring them into the tax net, and a lot of sensitization needs to be done, because if people don't know the importance of paying taxes, you just see them avoiding or evading tax. So a lot of sensitization, there needs to be much more collaboration within the government agencies and this informal sector to bring them to speed on tax collection.
Okay, I think, thank you. I'm trying to check to see. Okay,
Sorry,
I think
thanks, Wale. Hello, Wale. Let me add something to what Ronke shared.
Okay.
I think the major ills bedeviling our system is a lack of an updated population census. The last one we did was way back in 2006. I've always said the moment you're able to come up with a proper population census, you capture demography, you capture occupation, you capture location, you capture, the socioeconomic stand. So somebody mentioned, people who are obviously further down the ladder, where we have some 140 million Nigerians are in that space. How do you capture taxes from them? The first thing you want to understand is, when you do that population census, you also be able to capture what they do individually, and then you begin to group them properly. You see, some of the things that doctor said, now begins to come into play. For me, there's some fundamentals that we need to address as a country. I've been somebody who makes a lot of noise around, we need to sort our population census. Who is where? What sort of religious inclination is where? What sort of occupation is where? What is our specific age range? Today we have all sorts of data.
Okay. I'm trying to keep to time. So I think what you like is for better data for the government to be able to plan taxes and better coverage on the population, and so what people are engaged in and you're able to plan appropriately. I think we have questions on the queue, so I'm just trying to get as much questions as possible. Emmanuel, go ahead and you can speak. You can let us know your question. Emmanuel, the floor is yours. Yeah, thank you.
Hi, good morning. Okay, so I have a question here. I don't know, it's kind of out of the box, but I'm considering, do you think, or what do you think will be the impact of government taking a particular perspective? Because from the conversation so far, we are more focused on increasing tax, bringing more people into the tax bracket, getting more systems in place to ensure that we have a digitized and automated tax system. Have we tried to consider the route of intensifying people about the benefits of paying tax and actually showing them proof that it is worth paying the tax? What do I mean? I believe people will be more interested in paying tax, or people will be more committed to paying tax, where they come to believe from practical experience that there are certain benefits that accrue to them from paying this tax. So rather than, to me, I feel rather than forcefully pushing people into paying tax, you can lure them in by giving them certain benefits that would make them be more willing to come to the table and bargain rather than you dragging them to the table.
Okay. Thank you, Emmanuel. I think just to summarize, Emmanuel is saying that, look, that in most countries, there's a welfare benefit for paying taxes. So we should try and have that here. Okay. Grage, you can go ahead and ask a question. Yeah.
All right, so good morning, everyone. Good morning. Thank you so much for this very insightful session. Well, I'd really love to know what strategies can be taken to enhance agricultural productivity and food security as part of the economic reforms, because it seems as though nothing is working right now. I mean, looking at the common man and how food is a really big issue for us. I just want to know what strategies can be put in place to ensure food security as part of the economic reforms. Thank you.
Okay. So I guess the question on food security. None of us here is a food expert. Who wants to take a stab at that?
I can answer that.
Wale, take a stab at that.
Yeah.
Wale,
So,
go ahead.
sometime between 2014 and 2016, 2013 and 2016, I did a lot of work with the Gates Foundation around cassava and rice in Kogi and Benue states. So I really dove a bit into the food situation. Now, I mentioned a document earlier when we started, the National Integrated Infrastructure Master Plan. I used to be at Phillips Consulting then. We prepared that document with McKinsey in 2013. So again, it gave me a very, very good insight into the infrastructure required for food production. If you look at, the environment is very fluid. If you look at the environment today, first, one of the things I said earlier was that our overall infrastructure, if you look at energy, transport, ICT, social infrastructure, security, water, mining, agriculture, our infrastructure to GDP ratio today is very, very poor, somewhere around 30%. Therefore, the ability, if you look across the food value chain, as they say, from farm to fork, the ability for us to even retain what we produce is very poor today. Today, Nigeria loses close to about 60% of what it produces. It's incredible. We do not produce enough. We lose the bulk of what we produce because we don't have the required storage services. Transportation system is poor. Therefore, transporting food is very, very expensive. These are some of the considerations. Now, I've always said, what do we need to do? The investment in security must take priority today, security infrastructure. And there's a plan for it, at the national and subnational level. This is one of the things that people need to understand. All the documentation required is there. What remains is the willingness to say, look, we want to tackle security. We want to tackle road transportation. We want to tackle rail transportation. Until you're able to do these things on the infrastructure side, as well as put the required investments into farming, which is where you have a bulk of Nigerians, some of the young Nigerians, that strategy will remain a very, very difficult one to achieve, but it's doable with the willingness of government.
So if I hear Wale, I think Wale is just saying really that we just need to spend more on infrastructure. We do that, then at least that brings down the cost of farming, and it's able to improve output. And Dr. Nnaemeka, do you have any suggestions in that line? Again, let's stick to solutions. We're trying to optimize on time. Yeah.
Yes, Wale, I have a practical hands-on experience on this. In 2016, we started what we call Southeast Farms and Agricultural Processing Company Limited. It was towards this. Now, let me explain to you. There's no skyrocket science about it. We are not producing enough. And that's the truth. We can easily do it. Set up, we have 809 electoral wards. Set up clusters of mechanized centers. The basic things, tractor, bulldozer. Everything we talk about in every cluster, PPP framework, government is not going to fund it. So that in every of the wards, people can hire those things to do their, we can cultivate about 3,500. Look at the issue of rice. We consume 7.5 million tons per annum. Output domestic 3.8. Rice is something you can cultivate twice in a year. It's not a cash crop. cultivate new 1 million hectares in clusters. Government, federal government and state government, they know the rice farmers and they know the rice belts. If you set up 1,700 cottage factories, 16,000 tons a day, most of the machines are fabricated here in Nigeria, only bring in the motors. In 1 year, we can cultivate, process, and produce 10 million tons of rice. But there should be coordination and then provide security for those clusters. 8,809 clusters within the rice belt. And we can get it and across all the food, and then every local government area have storage silos.
Okay, thank you very much. I see Constantine Schoss. I hope I got that correct. You can go ahead and ask a question. Okay, yeah, go ahead.
Sorry, I was muted. So, I understand that there vast untapped natural gas reserves on one hand. On the other hand, there is lacking infrastructure in terms of getting it around and transporting to the end users, so for the experts. So, I wonder if anyone on the panel knows about.
I can't hear you, Constantine. You want to speak up? Yeah, I'm struggling.
Yeah, sorry. I just try to do it louder. So my question is that there are massive untapped natural gas reserves in the country on the first hand, and there like an infrastructure of sort of moving it around to the end users. I wonder if any of the panelists know of the plans to get it to make it like energy islands. Then you basically getting the natural gas through the well, then you process and build it around this natural gas deposit, the whole energy islands. So you have your electricity generation, you have high value products like, for example, for the ones which fertilizer sector, for example, or you build some processing facility, manufacturing, and so you could basically capitalize on those natural gas reserves and transport them more easily because it's energy condensed. Basically, it doesn't require the infrastructure in terms of the pipelines or anything. So, are there any plans to do that on a massive scale in Nigeria?
Okay, just to summarize, Constantine's question is asking, does anyone have any ideas of plans by the government to try and monetize Nigeria's natural gas or exploit gas reserves? And so he was talking about potential applications into power generation, fertilizer use, and other manufacturing applications. I believe that's your question, Constantine.
Yeah, and to get it in the decentralized way. So basically,
decentralized place. Okay.
You have the natural gas deposit, and they build infrastructure around it, and basically the island doesn't need to be integrated in some centralized infrastructure. And this is basically one of the ways to overcome that lack in infrastructure, which is not covering the whole country.
I think maybe to provide a bit of context here. So most of Nigeria's natural gas reserves located in Niger Delta, and I think there are only 2 or 3 major pipelines running out of there, Escravos, and then the line that goes all the way through the center of the country. I think there's a plan to build the last leg, that's the AKK pipeline that will go up north. So far, I think part of the reason why is because I think what are the main uses of gas? Mostly that will be inward looking, would be power. And just because we haven't gotten our power electricity sector quite right, I think that means that there's not enough incentive for people to invest in building these evacuation routes, pipeline, evacuation facilities that will evacuate gas from the south up north or to areas where you think they could power things, and at least there will be returns to the investors who buy. So I don't know if anyone is comfortable taking a stab at that, at gas.
Okay. Okay. Well, let's see. Like rightly pointed out, Nigeria is a gas-rich country. In fact, we are not actually oil-rich. We are richer in terms of our gas reserves. Our gas reserves actually are in excess value than our crude. Now, just like I rightly asked, of course, there are pipeline contracts that have been awarded to lay gas pipelines across the regions in Nigeria to the north. Now, but we need to, like I've always said, we don't have first of all, a country must think inward. We are gas rich, we are coal rich, we are not utilizing it. What do we do, and how do we decentralize this usage to have industrial clusters across? We have 774 local government area. In every local government area, there must be an industrial cluster, an industrial park built with all the infrastructure in place. How do we utilize our gas, both the associated and non-associated gas? Remember, again, we talked about gas flaring. We have been kicking the can down the road over the last 30 years. Till today, we are still flaring gas. So there should be a national strategy on how we, first of all, utilize the gas reserves we have, either processed in terms of the CNG, in terms of whatever derivatives that we can get from the natural gas to power things that we have here. I'll give you an example.
Okay.
Sorry. How do we convert to CNG? Okay. That's okay. So we think we need to develop a national strategy on how we can use it locally, domestically, before we even think about exports.
Okay. There's one question on the Q&A chat for which is, what would be your recommendations to corporates and businesses on tax planning in 2024, especially around the fiscal plans of government? So, Ronke, that's addressed to you from Jimmy. Okay, go ahead.
All right. Thank you very much for that question. So, for corporate organizations, we as individuals, we as finance managers across companies, what we need to do first and foremost is to look at our books, right? Because we know there's going to be increased revenue drive from the government due to the revenue they want to generate. And we don't want to be found wanting. So what we need to do as corporate businesses is to look at our books, review it more from, there's something we call like a diagnostic review of companies' books and records to be able to identify, are there opportunities that are within the tax bracket or space that companies are not even taking advantage of. Take, for instance, the export expansion grants. Is your company eligible for pioneer incentives? So look at all those things and identify incentives that you are not yet taking advantage of. And also look at your books more from a compliance perspective for corporate organizations. Are there gaps in your compliance process that you need to quickly fix? Look at the laws. For instance, now, proud to now we used to have the Yearly Finance Act, but this year there's not likely to be a Finance Act. What we need, most likely, there's going to be a reform of the total tax laws. So what are you going to do to ensure that you are blocking all those compliance leakages to avoid interest and penalties from the government authorities? Also, as businesses, in terms of this foreign exchange issues that we've also said, we need to start looking inwards. Are we going to start having backward integration to reduce the pressure or demand on Forex? Are you also going to start looking at how to generate more, to become more export-oriented driven? Also, we know that the customs are also, they've aligned their exchange rate, for instance, to what the CBN rate is. That means the import duties, a lot of things are going to go up. That means as businesses, you need to review your supply chain strategy. So to minimize the, to see how you can curb inefficiencies in the strategy. Are there things you can source for locally instead of depending a lot on imports, so as to help you minimize your production costs? Also, you also need to look at, are there things that you need to do? For a lot of companies are thinking of reorganization, doing things well. That means they need to engage more with their consultants to be able to guide them appropriately. Now is not the time to just leave money on the table. You're not taking advantage of incentives, or you're not even doing the right thing. Now is the time to be more focused in doing the right thing and ensure that the money we are all saying is not really there. We are not giving it to the government in terms of interest and penalty or being penalized for what we are not doing right. So there has to be a lot of reawakening amongst corporate organizations.
Okay, Okay, thank you, Ibirionke. I think we've run our time up, so I'll just give each person one sentence. What would you use if we made you president today? I think maybe let's just put it like that. In one sentence, what would you do to drive better, improve economic growth over 2024? Just one idea. I'm not asking for many ideas. One idea that would improve the Nigerian economy for businesses and companies in 2024. I think I'll start with Doctor. Go ahead, Dr. Nnaemeka. Yeah.
Pick the 1963 Constitution, dust it, delineate it to 6 regions from 4 regions, and pass it as the new Constitution of Nigeria. With the physical arrangement there, this country will fly.
Okay, thank you very much, Doctor. He wants to see the evolution. Mr. Wale, go ahead.
I think mine is geared towards improving the country's productivity. I'll look for a way to attract a lot more diaspora remittances. In the last 4 years, between 2022, 2021, 2020, and 2019, diaspora remittances that came into Nigeria was $80 billion US. Imagine if there was a way in which we could redirect, some of these into a productive economy. Those will be the things that I'll focus on. Thank you.
Okay.
Okay. So more from, I'll say if I was the president, I'll create a more enabling business environment for companies to thrive. And like what everyone is clamoring for, be more transparent and accountable as to how the taxes being paid by businesses, individuals, corporates are being put into use. I think there'll be a lot more people that will be happy if they see a lot of transparency and accountability in the judicious use of taxes. People will be happy to, support the government in terms of its revenue drive.
Okay, thank you. I think I'll just bring it to a close. Thank you to our panelists. Taking 2 hours of your time. Thank you to everyone for joining us as well. I'll just hand over to Elizabeth to close shop for us. Thank you, Elizabeth. Over to you.
Thank you very much, Wale. I've just been taking a lot of notes throughout the conversation. The conversation is very interactive and interesting, and there's been a lot of interesting points that have been dropped. So I'd first like to say thank you to our keynote speaker, Chinwe, who laid the tone for the conversation today, despite her ill health. We do wish you quick recovery, and we look forward to engaging with you another time. I also like to say thank you to our esteemed panelists. The conversation kept going very hot, and they were able to bring a lot of insights. They touched on oil and gas, they touched on agriculture, they touched on the financial sector, they touched on Forex, government, and also tax issues. And I think these were very, very insightful. They're able to prefer solutions on things governments can do or to propel Nigeria on the path of growth again and make us a resilient economy, and also talk about how companies can position themselves amidst the economic headwinds. So thank you very much for those insightful conversation. We also want to say thank you to our esteemed guests and listeners. Without you, we'll be having an event today. Thank you for keeping the questions coming. Thank you for making the session very interactive and engaging our panelists to bring out the best of this session. And also to you, Wale, thank you for a wonderful moderation and making sure that the conversation stayed on course, and also putting some clarity to certain questions that were coming out there, and laying some context to certain questions as well. We are indeed very grateful. And to the planning committee in CFA and FITC, well done. I know that because I'm also oversight over that. I understand the amount of work that went on behind the scenes to put this together, getting the speakers, just putting all the logistics together, the amount of meetings you had to sit on. Thank you very much. We appreciate your time. We thank the volunteers of CFA Society as well, who are putting their effort to make sure that this event held. And also to FITC for a wonderful collaboration, 2 years in a row, and we look forward to more collaborations in future. To the CFA Society Nigeria office, well done. Thank you again. And I think I'll just wrap up here and say thank you everyone for giving us a wonderful session, for attending, for being present, for being interactive, and for making us enjoy the session today. Well done.